Good morning, Sydney. Good morning to all of Australia, actually. Daylight savings hasn't changed, correct? That changes this weekend, I believe. I'm in Sydney. The person on the other side of my screen that you're also seeing, Nerida Conisbee, who is the Chief Economist of realestate.com.au. Nerida, how are you going?
I'm well. I'm really well.
I'm excited today because normally most of the content I produce is one, trying to pump people up, but today it's more about facts and data. And I'm going to be someone that sort of lets you just go through this great presentation. You're one of the luckiest people in real estate in Australia, because whilst all of us have to make decisions based on anecdote, you can actually make a better decision based on data, because you've got, tons of it available at your fingertips. So Nerida, for the audience that's watching this, some of them are watching it live on Zoom, some are watching it live via Facebook, and many of them are going to be watching this on replay. I want you to just give people a quick view, because many of the real estate agents particularly may not know who you are. Who are you and what do you do at realestate.com?
Yeah, so I'm the Chief Economist at realestate.com.au. I am in a very unique position in that I do have access to probably more data than anyone in the real estate industry. We purchased a property data company last year called HomeTrack. So they are providing us with lots of information on median price data, on individual sales, on anything rents, anything related to historical data on pricing. We have a big market research team, so we're regularly doing surveys of our customers. I'm sure many of you, as customers of realestate.com.au, would have been surveyed over time, but also of our consumers. So we're regularly surveying our consumers. But what's most interesting for me is a lot of the search data that we see. So we do track what people are looking at. We track how they're searching on site. We can track data from overseas. So, we know what's happening with foreign searches. We track keyword searches. And we've got enough volume to be able to use this data as a bit of a predictive, as a predictive indicator. So we do have millions of searches on the site every day, and that does provide some great insights. So today I'll be talking through not just what's been happening in the past in terms of pricing, but also some of the things that we're seeing in terms of the way people are changing their behaviour on our site.
Okay, well said, because I actually think, the more I think about it, you're able, through analysing the behaviour of people, be able to understand what they're most likely going to do long before they actually do it, because most data actually reports historical, what people have actually done after the event, right? Whereas what you're doing is you're saying, hey, on realestate.com.au, we can actually be sitting there and analysing that all of a sudden people are looking at this suburb out of the blue, which they weren't looking at before. And that suggests that they're probably then going to move on to going to open for inspections. And then that suggests that they'll potentially be bidding or making offers on a property. And then that whole process could take 9 or 12 months. Then we see it in the data. And what you're saying is that you've got this ability to have a rough forecast and say, this is happening, this is what it might mean.
Mm-hmm. Yeah, that's exactly right. So there's some really interesting trends at the moment with regards to search in Gold Coast, for example. So a lot of that spine running down from southern Gold Coast to Byron Bay, we're seeing enormous amounts of rental demand at the moment. We can see from a foreign buyer perspective that lots and lots of Hong Kong property seekers are looking on the site. Lane Cove is seeing enormous levels of search at the moment for apartments. So yeah, there's definitely lots of things that we see. Sometimes it's quite easy to explain. So, the Hong Kong search is quite easy to explain given the uncertainty and the political instability over there. But, something like Lane Cove today. I was talking to the Manly Daily about Amanda Shepherd from the Manly Daily about why is Lane Cove suddenly seeing tons and tons of search, but it is certainly being seen on the ground too. When we talk to local agents there, they are seeing lots and lots of activity. So sometimes it's easy to explain, and other times it is quite difficult.
Nerida, should we cover Asian buyers now, or you want to cover it later on in the presentation? Because I'm curious to see what is happening with Asian buyers. Asian buyers was a few years ago one of the major contributors to real estate being so robust and actually having so much strength and growth, particularly in certain parts of Australia. Then they sort of started to disappear from bidding at auctions, and then people started there was just less Chinese. I would notice less Chinese buyers myself at auctions, right?
Mm-hmm.
What's going on with Chinese buyers in Australia?
Yeah, so I'm hoping you can see the slide I've got up there. Yeah, yes. So these are property searches that we're seeing from overseas at the moment, and comparing what we're seeing now in August 2019 compared to August 2018. And what we've been seeing now is that Chinese property seekers have dropped off significantly from around 2017. So in August 2017, or towards the end of 2017, we were seeing around 1,000 searches per day coming out of China. That's dropped. We're only sort of seeing 300,000 or 400,000 searches per day. So it's definitely what you're seeing on the ground with regards to overseas buyers from China. They have definitely pulled back. We can see it through FIRB data, but at this stage it doesn't look like they're returning in a hurry, which is quite different to what we're seeing in some of the other countries.
Why did they stop, Nerida?
I think there was a lot of reasons. I mean, obviously there was additional taxes on foreign buyers, which made it far less attractive for them. A lot of foreign buyers Chinese buyers found it quite difficult to get finance. So that was a factor. We've got vacant property taxes in many places now in Australia. So there was a lot of things that kind of made Australia seem quite unfriendly to foreign buyers and Chinese in particular. So when you go to China now, there's a lot of the buyers are moving to other countries such as Thailand. They're looking in Japan. So those are probably two of the major ones. Lesser extent Vietnam, even lesser so Cambodia. So a lot of them saw Australia as a great place to be, and a lot of them were very, very active in Australia, but they are looking elsewhere now. But also just, I guess, the general sentiment in China with regards to Australia is quite negative in terms of what's happened. So if you talk to, the average person in China at the moment, and they will talk about Australian prices dropping and it being not such a great place to buy, which, was kind of like what we were hearing here in Australia, but it did get amplified a lot more. The negativity got amplified a lot more in China. Okay.
Can I get you, because I have seen your presentation briefly this morning, can I get you to swing right to the start again? Mm-hmm. And what we might do is just go through, what on earth is actually going on. Now, you've brought this first slide, and this slide is of particular interest to both consumers that are watching this, but also to the real estate agents. What has actually happened in real estate over the last 1 or 2 years?
Yeah, so I guess, we often talk about the property market being in downturn, and, we've been talking about it pretty much since September 2017 when Sydney pricing began to shift. But what's been happening is that we've continued to see high levels of variation across Australia. And if you have a look at Sydney and Melbourne, for sure, they have done, they have dropped a lot. Somewhere like Blacktown, Ryde, we have seen price declines of, 15% plus. Inner east of Melbourne, 14%. But if you have a look at the other end of the scale, we've got places like Tasmania continuing to see, or continue to see very strong growth. In fact, some of the strongest growth that had ever occurred in Tasmania occurred over the last few years. But also regional Victoria has done really well. So, we've seen places like Ballarat see very strong growth, Geelong, Latrobe, Gippsland. So I think one of the problems is when we talk about property, even at a national level, we talk a lot about downturn and price declines and all these challenges. But with property, there's always such an enormous level of variation in the way that property markets perform.
Okay, beautiful. Let's move on to the next slide.
So there has been a lot of stimulus. If you have a look at some of the things that have been occurring, we did have the May election result, which was particularly positive for the housing market. We did see quite a boost in search activity in the week following the election result, and mainly focused in Melbourne and Sydney. We have had a lot of the restrictions removed by regulators. So the speed limit on investor lending growth, the cap on interest-only loans, the stress test on home loans have all now been removed. So that's been a positive for people who are looking to get finance. Still very hard to get finance, but slowly improving, at least from a regulator's perspective. We have had income tax cuts. We've got no changes to negative gearing. We've got a first home buyer deposit scheme that will start at the beginning of next year. So, all things at a federal level are pointing to greater stimulus, which seems to be good news for housing. And then we have, of course, the interest rate cuts, 2 cuts. We will probably see one today. There's an 80%, the markets are pricing in an 80% chance of a further cut today. We can see generally with rate cuts that every time there is a rate cut, we see almost an immediate increase in the level of activity on site. So, anecdotally, it's not surprising, but it certainly shows up that people feel more confident about housing when access to finance is cheap. And then we've got globally interest rates are trending down. So it does put less pressure on banks to increase mortgage rates. So there's a lot of things that are going on which are really good news for housing.
So Nerida, in 3 or 4 hours, we're going to work out how intelligent you are, because you're going to tell us before the event. And many people watching this video would actually know the answer to that question because they're going to be watching it post the announcement. Are you also jumping on the 80% factored rate on what's going to happen with rates, or are you going to put your neck out and say no, rates will stay the same?
Yeah, look, I think they may hold and go in November, but then I'm looking at that 80% proportion on, the 80% probability that's coming out from the market that is saying there will be a cut. So I think if we don't see a cut today, it'll happen in November. But yeah, the odds are against me thinking that we won't see a cut today.
Well, you answered it a lot better than the fortune teller in Byron Bay when me and my wife were trying to conceive. Many years ago, we were on a holiday in Byron Bay and we went and saw a fortune teller, and she sat there. We paid, I think it was $124 an hour. And then she said, so I've got good news for you. It looks like it's a strong possibility that you will have a baby. And then as we're walking out, she said, but by the way, of course, there's also a small possibility that it's not going to happen. But you actually were a little bit more definitive than the fortune teller in Byron Bay back in 1999, I think it was. So, Nerida, let's move on to that next slide.
Okay, I suppose completing this one is we do have a lot of uncertainty. So on one hand, the government's doing what they can to really stimulate the economy, but we've got a trade war, we've got slowing growth in China, we've got Brexit. There is a lot of global instability which could have a negative impact, particularly on our unemployment rate, which no matter how low interest rates go, there's very little that the Reserve Bank or the federal government or state government can do about the fact that we are influenced by what happens globally, and globally things aren't going that great at the moment.
Well, it's funny you say that, because the guy I was having a coffee with this morning said to me there was every reason in the world that he should be buying another property at the moment, because he talked about the fact that he's buying a property in the lower price range, and he thought the first home buyers grant would push prices up in that kind of property next year. The rates were low. He'd noticed that things had sort of bottomed off about 6 months ago, and he could see things were climbing. And then I said to him, it sounds like you should buy. And he said, yeah, but I'm a little bit nervous because there's been a bit of restructuring been going on in the sector that I work, and there's not a heap of jobs. So I think fundamentally, Nerida, you can have all these economic factors in one part of real estate, which is interest rates, clearance rates, you know, all that sort of stuff stacking up. But as a human being, you still don't feel comfortable having a good night's sleep knowing there's no certainty with employment, isn't it?
Yeah, look, rising unemployment is actually the worst thing for property markets. You know, we talk a lot about access to finance and interest rates, and for sure that does make a difference in terms of pricing. But if interest rates rise, you know, most people can adjust their finances. They can, you know, take their kids out of private schools or sell a car or not go on holidays. But when people lose their jobs, that's it's very, very bad news. And if you have a look at the last time we saw a recession in the early 90s, and we saw very strong declines in pricing, particularly in Melbourne, that was really driven by the fact that people were just losing their jobs, and as a result, with, you know, very poor demand for housing, a lot of distressed sales, you know, very, very bad news. So, you know, unemployment's increasing. It's increased slightly over the past month. It's certainly not at recession type conditions, but uncertainty also creates a lot of people changes their decision-making processes. And, you know, we can certainly see that at the moment, not just at a household level, but also at a business level. There is a really strong focus on safe assets at the moment.
Okay, beautiful. Let's move on to that next slide.
Okay, so I guess well, what has been quite interesting is having a look at search activity and what's been happening in our capital cities. And in the same way that over the last couple of years, you know, we have seen Sydney and Melbourne struggling in terms of pricing. Right now, it's the stimulus has really led to this significant boost of activity in Melbourne and Sydney. So, you know, when we have a look at markets like Adelaide, you know, Adelaide's continued to do quite well over the last couple of years. It's the stimulus that's been put into the market has had a fairly you know, benign effect. You know, Adelaide's search hasn't moved at all. Hobart does seem to be losing favour, which probably is due to the fact that it is getting so expensive at the moment. Hobart is now seeing quite a few suburbs with $1 million median. So I think Battery Point is sitting at 1.2 million median. So yeah, as a result, it's, you know, we're seeing this drop in search. Perth and Darwin still challenged. Brisbane's, I'm not sure exactly what's happening there with search in Brisbane, because that does seem quite extreme, but we're not really seeing the same level of strength in Brisbane at the moment in general that we're seeing in Melbourne and Sydney. We are seeing quite a lot of strength in the Gold Coast, which I'll talk about in a sec, but Brisbane does seem to be taking a little while to recover at the moment.
Okay, and I have to say, Nerida, I went overseas around the 8th of June, or the 7th of June, and I returned on the 24th of July. And from when I left to when I came back, I would have a punt, Nerida, and I auction. My auction business is in Newtown, the inner Sydney, inner west of Sydney, inner city. I would have noticed that things have gone up 10% in that 8-week period. You know, it was like two different worlds. Can I ask you, this search increase in this, you know, this period all of a sudden, how much of it do you think has got to do with federal election? Because the election was in May.
Yeah, it jumped. Yeah, it definitely jumped in that week following the federal election. So what we saw in Sydney and Melbourne, we saw a jump following the election. We saw a jump following the first interest rate cut and another jump following the second interest rate cut. So, but it was very much Sydney and Melbourne focused. And what seems to be happening is in both, well, Sydney in particular, if you have a look at a lot of premium suburbs in Sydney now, they are seeing pretty strong price growth. I mean, Vaucluse has jumped 20%. We've seen Collaroy jump 15%. You know, these pretty expensive suburbs in Sydney are already, you know, doing very, very well in terms of pricing. We haven't seen the jump as significant in Melbourne as yet. Melbourne premium isn't jumping as fast as Sydney has, but we do expect it to happen over the next couple of months.
Okay, Beautiful. Let's move on.
So a big problem with sellers. So I think, as you know, if there's a lot of people who work in real estate would probably be pretty aware of what's happening in their local markets in terms of listing volumes. New South Wales in particular, we have seen this enormous change in the number of listings. So if you look back to August 2018, we were right in the middle of a property downturn. You know, the Royal Commission was on. There was a lot of negativity around the state of the market. The media was, you know, firing in terms of things like bricks and slaughter, you know, those really negative commentaries. But at that time, we saw more seller activity than we're seeing at the moment. So it's and it's across the board. You know, everywhere is seeing this decline in listing volumes.
Nerida, the work I do is obviously aligned more to consumers, more with real estate agents than consumers and vendors, and it is a very painful period for real estate agents at the moment, because what actually happens is real estate agents don't care that much from a financial perspective on whether prices are going up. They're highly impacted by the volume of real estate, because the way they're remunerated is like whether a property sells for $1 million or 800,000. The fee to them doesn't dramatically change. They're highly dependent on getting transactions done. I'm having a look at some of this data. I mean, we're talking about, you know, in places like, say, Sydney, we're talking 30% less listings, you know, which would probably then suggest that would transpire to 30% less income if you didn't grow your market share. How much of this shortage of listings is been driving price growth that we've seen in the last 2 months, say 3 months?
Yeah, I mean, it has a lot. If you look at a simple demand-supply relationship, if we have this big jump in Sydney and Melbourne in terms of property seekers and people searching, looking to buy, and we've got this corresponding reduction in the number of people who are looking to sell, then you know that's what leads to price growth, which we are seeing in premium Sydney at the moment. So yeah, for sure. I mean, it's definitely a factor, and you know, at this stage we would have hoped to start to see a bit of an increase in listing volumes, but you know, we're not seeing a surge at the moment. Yeah. It's still looking pretty flat.
Yeah, and to all the real estate agents that are watching right now, I don't know what's going to happen next year, and I don't think anyone does, but one thing is for sure, if you've got vendors that are sitting on your database that express some interest of selling at a previous time and they never came onto the market, this is a window of opportunity to get onto the phone, to give them a ring and to let them know that life has changed in the last 3 months. And even if they had actually spoken to you in February or March this year, they could be very surprised at the price that they could achieve on their property, because there is a shortage of stock. Buyers are sort of paying a bit of a premium. Whether this is short term or not, we don't know. But one thing is for sure, if you're a seller in a marketplace that's got low stock levels, you'll benefit out of the demand and supply curve. So, you know, the challenge, of course, with that strategy, but Nerida, is that a lot of vendors then say, but where will I go next?
Yes, yeah, that's exactly right. I mean, the other thing too, that, you know, the times that we do see quite big jumps in listings is when people are under financial distress or, you know, are forced to sell. And so the fact that interest rates are low, unemployment has crept up a bit, but, you know, still really low is really just leading people to hold on to properties. And then you consider things like stamp duty, that, you know, if you're sitting in Sydney where stamp duty is excessively high, it doesn't really make sense to sell unless, you know, there's something for you to buy that's pretty good.
Okay, as we're talking, I'm just seeing some of the comments that are coming through. Nerida, we are seeing strong growth at the top end of the market on the Gold Coast. You can talk to that. Yeah, that's a real estate agent.
Yeah, I've got some data on that. It's quite interesting.
Okay, beautiful. Next one is here, and I won't get you too sidetracked, but I'll just like, you know, I like to I like this modern world that we can have this interactive conversation with people on the spot. Nerida, when people use realestate.com.au to search for property, do they modify the search results in date order, newest to older, or do they just leave it as most relevant? Is that got you stumped there, or have you got a view on it?
I don't know. I know that people rarely go past page one when they're on our site. I do know that when in talking to our product teams and consumer teams, they do say that. So, the more they rarely will get to page 7 of a suburb. I do know that, but yeah, I don't think they sort that way. I think people just kind of take what's given in terms of what comes up when they search on a suburb.
Okay, let's move on to the next slide.
Okay. So in terms of pricing, when we're not really seeing any price growth at the moment, so across capital cities. So if you have a look in premium Sydney, if you have a look in parts of Gold Coast now, they are doing particularly well in terms of price growth. But across our capital cities, it's still looking pretty flat and pretty negative on a year by year basis. Cairns, I don't know if that's just a bit of a blip, but is actually topping the list on a quarter by quarter growth, which is quite interesting. Gold Coast, Tweed, Sunshine Coast showing a lot more strength at the moment than what we're seeing in Brisbane. So again, not sure quite why, but quite different. And then Adelaide's just a market that just keeps going, no matter what seems to be happening at a federal access to finance level or at a fiscal level. Adelaide just seems to be a market that, is pretty stable, doesn't really see big declines that we see in perhaps Melbourne and Sydney. Okay,
so probably one of the things as I'm reading into that table that you've put up there, I would suggest, Nerida, the results of the response since the federal election in, say, areas like Sydney and Melbourne is probably not clearly articulated yet, because by the time properties sort of get sold and settled and it's all thrown into a basket where you can actually have some good meaty research, it probably takes time. So it'd be interesting, I'm pretty certain if we were looking at this chart by December, we'd probably see a little bit more growth in capital cities.
Yeah, and I think that's the thing that we are seeing these good conditions in premium markets and very strong demand in premium markets. But as you shift out to high supply areas, for example, if you go to places like Parramatta Apartments, for example, that's obviously not performing as well as, say, eastern suburbs Sydney. So it does take a little while for prices to move on a capital city basis when we look at markets that are recovering from a downturn that's gone on for 2 years now.
Okay, well, what's going on? A few comments coming through. Lisa Novak says, it seems like it's a sugar hit market. Thanks, Lisa. We had greetings from overseas from Dick Carlson. Good session, guy. Dick from Deer Creek, the guy that owns Deer Creek. Good to hear from you. Shane Beaumont says, it's a great time in Western Australia to upgrade if you can. Of course, Shane, you're biased. You're a real estate agent and you'll use any opportunity like you should be selling your state. Nerida, let's move on to the next slide.
Yeah, okay. So regional level, Launceston is the strongest performer at a regional level. Not really much of a change. We are still seeing regional Victoria do really well. We're still seeing, we are seeing mining towns do quite well at the moment. So Mackay and Fitzroy are up. Mackay's, a very challenged market. I mean, pricing in Mackay is actually still below where it was a decade ago, but finally a little bit of positivity in that market. And then, areas stretching from, Coffs Harbour, Grafton, Richmond, Tweed, seeing some decent conditions. And then Brisbane inner city has also seen growth, but that's primarily, I think, related to the fact that we've seen a lot of new supply enter the inner city market, which has lifted values. So it's a little bit misleading, I think, in terms of what's happening in Brisbane inner city.
Okay. So for everyone watching this, it's a real estate agent. This month, we're in October. Actually, in the next 2 weeks, I And Nerida, are you coming to Hobart with realestate.com and Tassie and Lonnie in the next 2 weeks? No.
No, I'm not going to Launceston.
Okay, so the 14th and 15th, to all the real estate agents, realestate.com.au is running their momentum events in Lonnie and Hobart. Speak to your realestate.com representative if you haven't received the invite. I think there's going to be around 200 people at each event. And it sounds like, Nerida, once I get there, people are going to be in good spirits because life isn't it?
Yeah, Launceston is having its moment. So, yeah, they will be happy, I think.
Okay, beautiful. Let's move on to the next slide.
Okay, so as we've been talking a little bit about premium Sydney, some pretty decent price growth happening in some of Sydney's more expensive suburbs. So you've got there places like Vaucluse and Rose Bay with medians well over 4 mil. Palm Beach is up. The only really affordable suburb that has seen, some price growth in Sydney over the last 12 months has been Cabramatta, which is a little bit surprising. I think Cabramatta is a suburb that is changing quite a bit, and it's one of those things. We do see quite a lot of search in Cabramatta. It does, I think it's an area potentially that's attracting a lot of younger people, but at the moment the story is that Sydney premium is well and truly growing, and if you wanted to get a bargain or a relative bargain in Vaucluse, you've probably left it a little bit too late.
You know what I'd be doing? You live in Melbourne, don't you, Nerida?
No, I'm in Sydney.
Oh, you're in Sydney, even better. I think the way that I'm going to buy a bargain is I'll just follow you at Open for Inspections, because I actually think to myself, if Nerida's looking at those areas, the timing must be right. Okay, so Nerida, are you one of the people that had a 24% increase in your principal place of residence? Are you a Vaucluse owner?
No, sadly not. No, I'm not in a $6.5 million house.
6.5. Well, I'm just doing the numbers there. Hey, that would have gone up from around 5 mil to 6.5. Geez, we love real estate, principal place of residence, tax-free, $1.5 million. Life is good. Okay, so
no wonder we all love property.
Let's move on to the next slide.
Okay, so Gold Coast premium is also doing really well. So there's a real trend at the moment. Gold Coast market behaviour seems to be following Sydney, and I think it is in part to do with the fact that there is a lot of Sydney money pushing into the Gold Coast, and we can see it from search. So we often track where people from Sydney are looking outside of Sydney, and one of the top destination is always the Gold Coast for Sydney people. So we see it not just in terms of buyer activity, but also rental activity. And I think that's probably one of the reasons why this market is following Sydney quite closely at the moment.
Okay. As you're watching this video, guys and girls, may I make a suggestion that you press the share button on the bottom of the left, because if you've got an audience of consumers that follow your content, what you've got to be doing is making sure that you're constantly educating your marketplace, seeing like a thought leader. I think it would be a very useful thing to actually just share it and sort of say, here's what's happening in real estate from one of the great brains of the real estate industry, realestate.com, and the Chief Economist, because I think people are sick and tired of seeing you post photos of you having breakfast, and they want to start seeing good, valuable content that's going to help them make better decisions in their life. Let's move on to the next slide. As you're talking, Nerida, it seems you've nailed this, because I've got real estate people coming on saying Mermaid Beach oceanfront has just gone crazy. And the data reflects that,
Yeah, it's good. It's good when I hear anecdotally that people are seeing it on the ground. It makes a difference.
Okay, mining towns are back. They're back. Wow.
They're back. It's been a long downturn for these mining towns, but we are seeing very, very strong conditions in mining towns, and again, highly linked to new projects. So anywhere where there's been a new project, we have been seeing very, very strong rental demand in many of these locations for probably about 18 months. And places like Whyalla have seen big jumps in rental levels. Now moving on to pricing. So you can see there, these areas are super cheap already. You do have to be very careful investing in these areas. They do tend to be highly volatile. So and closely linked to the life cycle of the projects. Interestingly, WA, some parts of regional WA are also doing quite well off the back of improved agricultural conditions. So we're hearing of some locations in WA that are, a lot of confidence in that agriculture sector, partly because China's now looking to import more from Australia because they're not importing so much from the US, but also because of New South Wales drought. So New South Wales is really struggling in regional areas, but it has lifted demand in a lot of regional WA.
Nerida, it's funny you say this because 2-3 weeks ago I was doing some work for News and our REA in Bundaberg, and I hadn't booked much. I mean, I just thought to myself, there's no state of origin or there's no Australian Open. I'll book myself a hotel. And then I was getting dropped off by the News Corp executive to Bundaberg, and I quickly got on my phone, ringing up hotels to stay at. I should have done that beforehand, but anyway. So it's 5 o'clock and I've called 7 hotels, and every hotel on a Monday night is booked in Bundaberg. And then the motel owner said to me, he goes, we're just flat chat. He goes, it's just busy all of a sudden, last 6 months again. So it's funny, as I'm looking at this, I just can't help it. I'm looking at these mining towns. They're a little bit like share market increases.
Yeah.
This is not traditional real estate, right? This is more like a stock market,
Yeah, they're pretty extreme in terms of price growth, but I suppose you also have to consider the downside. They do tend to drop very, very quickly as well. So it's not as risky as Bitcoin, but it is one that if you are investing, you've just got to watch it so closely because they can turn off. The growth can turn off very quickly.
Yeah. Okay, let's move on.
Okay. So this is some of the activity we're seeing on site with regards to views per listing for rent, and this is interesting in that when people are on our buyer site, we know that there's a lot of people that are just looking for just having a look around in their area for inspiration, ideas, or looking at what homes are going to selling for in their local area, but on our rent site, we generally don't see people get on there for any other reason than looking for rent. So it does give us, I think, a bit of a purer view in terms of what's going to be happening in some of these areas. What we're seeing is very, very strong rental demand continuing in Hobart. So Hobart actually does have a rental crisis at the moment. There's not enough rental housing. It's the vacancy rate is sub 1% and does need new housing development. The economy really switched there and they haven't really responded properly. But then some of the other areas which are quite interesting, Adelaide, you can see there pretty much all of Adelaide seeing very high rental demand. So quite a bit of, I think there's been quite a lot of jobs growth in Adelaide, which is leading to this surge. A very strong demand in Melbourne. So Melbourne is a market that has developed a lot of housing, but still sees very, very high levels of rental demand. And then you can see that southeast Queensland, northern New South Wales focus. So places like Sunshine Coast, Gold Coast, Richmond Tweed, and also interestingly Brisbane inner city. So we have heard again anecdotally that people are saying it is quite hard to get rental accommodation in Brisbane at the moment, which I think is quite interesting given that we're not really seeing pricing surge, but often a surge in rental demand is a bit of a precursor to it in terms of what happens to price growth.
Yeah, I know this sounds like a weird formula, but one of the ways I work out what's going on with yields in a marketplace is now in the hotel rooms that I go and book and stay. Like, for instance, I noticed the other day I was staying at Bowen Hills at the Ridges, where I used to pay like 160 a night, and then I looked at it and it was 280 for the night, and there wasn't an event going on. But it appears that, and maybe it's the Airbnb effect, that whenever there's a shortage, you also notice that in the what hotels charge in that marketplace. Do you think there's a link there?
Yeah, I do. Like, particularly if you have a look at jobs, like if you start to see a lot of people travelling to a city, then often you do see that very, very close link to hotel accommodation.
Right. Okay. Let's move on.
So we talked about this before, big drop in Chinese, big increase in anywhere that's a little bit unstable at the moment. So Hong Kong and UK, you can see there are lots and lots of property seekers from there. I think Hong Kong buyers potentially could be a big market for anyone that's looking at doing off the plan, given, Chinese are gone. We may see a bit of a replacement with Hong Kong buyers. Still increases from Singapore, UK, New Zealand are all seeing pretty big upticks at the moment. It's interesting. One of the interesting things is when we look at this data on a suburb level, that when we look at Asian buyers, they are very focused on university suburbs. So we do see high levels of search from Asian buyers in places like Clayton and Carlton and St Lucia in Brisbane. But when we have a look at non-Asian buyers, they really love beachside areas. So New Zealand buyers are very, very active on the Gold Coast. UK, they love Manly, they love Byron Bay. US, St Kilda, so there's a real beachside link when we look at non-Asian buyers.
And the other thing I can't help but as someone that does auctions on the weekend, what I notice sometimes, even though someone, like, there's so many times I get confused because I'd see someone that looked Asian and you thought, oh, hey, there's, some wealthy Asian investor. And the next thing you know is they open up their mouth and they've just graduated out of Sydney University in their first job working for a business, in the city, and they're just trying to buy their, first unit, But what appears to have definitely happened, I've noticed, is the true Chinese buyer has definitely not been the final bidder at a lot of my auctions in the last 2 years,
Yeah, it's generally not Chinese money buying it anymore. It can be Chinese born, but Australian residents, but not Chinese investors, I guess.
Okay, let's move on. Next slide.
So I guess I'm putting up a bit more stuff that we're seeing in search. Looking at keyword searches, we do see a lot of consistency across Australia, but there's two states that are quite different. So Victoria and Tasmania see quite different keyword searches than compared to what we see in New South Wales, Queensland, WA. So some of the regional differences we see are in Sydney, a lot of water-related keyword searches. So things like water view and swimming pool, waterfront, beach come up a lot. Queensland's quite similar. We move down to Melbourne, we see a lot of things like courtyard and warehouse and also development-related terms. Melbourne people seem quite more interested in redeveloping properties or sites than what we see elsewhere, which is quite unusual. And then Hobart, we don't see, obviously swimming pool isn't as popular. Not great, not as warm a weather there, but sometimes we see funny things pop up, like church for a while came up in Hobart, which was apparently, I thought it was because people wanted to be near churches or live in churches, but ended up being the Uniting Church were doing a big asset sale. So there was a lot of people searching for church on our site. Also, Granny Flat is very popular in Sydney. We don't see it hardly at all in Melbourne. So maybe a little bit to do with pricing and, the fact that for Sydney people, having a bit of an extra income may be more attractive than people in Melbourne where homes are a lot cheaper.
I think this is I know it's very simplistic and it's just bullet point words there, but I think, it's obviously these are hot buttons. These are unmet needs that people searching head towards. And I think if you're a real estate agent that's very clever in marketing, if your property does have these things, you'll want to make a big deal about highlighting it in your marketing and, laser focus and make it even bigger, because it's essentially saying, by the way, Nerida, until we got to the word beach, and beachfront, waterfront, I had the perfect home. I thought I had the home, but this is what people are looking for. Beautiful. We got any more slides?
Yeah, I've got a few more. I guess renters, they're very different.
Yeah.
Yeah, they want their pets.
Pet-friendly properties are important to tenants. We know that that's been growing over the last few years.
Yeah, absolutely. And the other one is NRAS is very popular. So we don't just see this come up in keyword searches. We actually, every week, we have a look at the most clicked property for rent on our site, and almost every week it's either an NRAS property or it's a very affordable property.
You know what, Nerida, you've got to explain to me what NRAS is.
So NRAS is the National Rental Affordability Scheme. So if you're on an income, which I can't remember off the top of my head, I think it's below 80,000, you get a discounted rent for an NRAS property.
Okay, so it's important. Okay, beautiful. So these are the terms. Property managers watching this, this is what your marketplace is looking for. Beautiful.
Yeah, pets in particular. Okay, so then this is views per listing. These are the suburbs at the moment which are seeing the highest views per listing on our site. So to give you an idea, and I'm sorry if anyone's heard me give this example because I always give it, but Albert Park would see around 9,000 views per listing. So every listing that goes on to realestate.com.au would see about 9,000 views. If we go to the other end of the scale, Berrima in Darwin, which has the Dondale Correctional Facility in Darwin Prison, sees around 250 views per listing. So every suburb in Australia has this enormous variation in terms of the way people search on the site.
You've just made me feel a lot better, Nerida, because for the last 25 years, I pretty much say at the start of every auction, ladies and gentlemen, this is arguably one of the best suburbs in Australia, Newtown.
And yeah, Newtown is amazing at the moment.
I can actually say it. It's not me saying it. It's not the auctioneer saying it. It's Nerida saying it. Beautiful.
Yeah,
okay.
There's two suburbs that have been popping up a lot lately, which is one of them's Newtown, which has sort of come out of nowhere in terms of rising to the very top of the list. And the other one, which hasn't made the top 10 this month, is Brunswick in Melbourne. And I think those two areas, they are areas...
But they're similar. I mean, Nerida, I don't live in Melbourne, but I stay at Brunswick occasionally. Brunswick reminds me a little bit of Newtown.
Yeah, exactly. They're two suburbs, I think, popular with young people. I think, and they're also at a price point that, I mean, probably less so now, at a price point that younger people can afford, but they were, at cheaper price points. So as a result, have quite radically changed in terms of their popularity.
Beautiful. I've just had someone say, Jeff Luby, when I was 20, you could buy a good house in Vaucluse for $175,000. Yes, that's right, Jeff. But guess what? The next best time to buy is tomorrow, and maybe it won't be Vaucluse. Maybe it'll be Allenby Heights.
Probably Newtown, maybe.
Newtown. 542. Beautiful. Let's move on to the next slide, Nerida.
Yeah. Okay, so renters, we talked a little bit about rental demand, top areas, but on a suburb level, we can see Adelaide, a lot of Adelaide suburbs coming up there, a lot of Gold Coast suburbs coming up there as well. So Tugun in particular is often ranked, always ranked in the top 10 nationally. So I'm not sure why Tugun is so popular with renters, but it's always up there. And then when you have a look at units, again, you can see the dominance of Queensland suburbs. The list is quite different to what it was a couple of years ago. A couple of years ago, we were seeing most of the suburbs, almost all of the top 10 were located in Hobart. So we have seen a bit of a shift around in terms of rental demand.
Beautiful.
And then the streets. So I think this is my last slide, but really looking at the top streets. So in the same way we look at views per listing on a house level. So that's generally it's always over a 6-month time period. We've done the same thing looking at streets, but doing it over a 3-year time period just to give us enough content. But you can see there's a lot of premium streets on that list. So, when we look on a street level, people tend to be looking at these locations, not just to buy, but also just to get inspiration, ideas. Regent Street, Elstonwick was actually the place, was one of the block streets. So, so as a result, you know, that came up on top. But many of the others are just really nice streets and have some beautiful homes.
Okay, absolutely superb. Can I hit you with a few questions before you go? Because there's been a few people commenting and I want to feel like we've been listening to them. The first one is, Nerida, what does historic data show in terms of housing supply during economic downturns, and are those attributes still valid today?
Okay, so housing supply, so new development, do you think that? Yeah, new development. Okay, so at the moment, the market's quite unique in terms of the downturn we're seeing in new development activity, primarily because we've come out of record levels of new construction. So that's part of it. You know, we've never seen so much construction activity as we saw over the last 5 or so years. The other issue, though, that's going to hold up new development this cycle is the fact that we've had 2 groups that were big buyers of off the plan drop off significantly. And one of them are local investors. Investment finance is down, I think, 45% from peak that we saw in 2015. So it will take a long time for them to come back into the market. Foreign buyers too have dropped off significantly. So they would have kicked off, a lot of the foreign buyer activity would have kicked off many construction projects across Australia. So both of them are gone. And then also we do have a lot of quality issues, which will take some time to unravel. So, you know, things like the Opal Tower, we've got flammable cladding issues in Melbourne. And I think there is a lot the development industry does need to do to restore confidence in the sector. So I think it will take a longer to recover than what we saw perhaps, say, post-GFC, where in Melbourne, we continue to see quite a lot of levels of construction because there was a lot of Chinese buyers in the market, a lot of Chinese developers that really got a lot of projects kicked off, even though the economy was quite slow.
Okay. A question that's come in is, what do you think will happen if interest rates go to 0? I mean, do you think that's possible?
Yeah, it's possible. I do think... there will have, I mean, the thing is we can't rely just on interest rates to try and stimulate the economy. So, you know, on one hand, dropping interest rates does stimulate housing. It should stimulate retail trade. It should stimulate business activity. But on the other hand, we have this competing influence that the global economy is going through a lot of trouble. So it will be good for housing. It will be good for activity, but I don't think it will necessarily be the saving grace in terms of getting the economy firing to a large extent.
Okay. Guys and girls, thank you so much. I am going to let people know that those that registered for this will get a copy of Nerida's slides. If there is any resources, Nerida, we'll speak to you offline that we can put a link in the comments that maybe takes them to a realestate.com resource centre. I have to say to you that anyone that's watching this, whether you're a consumer, whether you're in trade as one of the real estate agent clients of mine or of realestate.com, I suggest that you will be very surprised at the amount of data, information, content you can actually get from realestate.com. Nerida, when I was in real estate in the late 80s, early 90s, did you know that we would have to go to the local council, look at what properties had been transacted? We'd drive down the streets to see which properties have come on the market. Today, you can sit behind an Apple Mac, sit there, you can work out everything that's going on. And I think the marketplace is dying for real estate agents to rock up to be trusted advisors and not this group of commission breath salespeople that use anecdotal evidence. Yeah, just become the Google of your marketplace. If you're a real estate person, if you're a buyer or seller, you've also got incredible data at your fingertips now that realestate.com has purchased. What's the name of the data company that REA purchased?
Home Track.
Home track. Is your life better now that you've got that company under ownership on REA, or hasn't really changed for what you do?
No, it's great. It's been a really good. I mean, great having so many extra data people. We do employ a lot of data people, but not just access to additional data points, but also a lot more data scientists. So it is making it far more interesting.
Okay, Nerida, thank you so much. We would love to have you on. It's part of our partnership arrangement with realestate.com on a Tech Tuesday. I look forward to bringing you another Tech Tuesday next month, Nerida. Thank you so much, and we'll speak soon.
Thanks, Tom. Speak soon.
Thank you so much. Susan, we're signing off, and press that share button. Guys and girls, signing off here.